Welcome back to the channel, everybody. I am Mick Alfany. We have a lot of news to cover today. Let's get right to the business here. This first article is on Ripple.com and it's titled Streamlined Management for Multiple Crypto Liquidity Venues. Anytime they talk liquidity, that's what I want to hear. The use of liquidity, providing liquidity, acting as a rail for capital to move across. That's going to be key, especially if you see where the world is heading today. You see it's becoming a multipolar world. You see that there's dollar dumping happening. You see that the dollar is in trouble on multiple levels, correct? That means that liquidity when it comes to the dollar in the future might be something definitely to keep an eye on. And many institutions may need it. Now, we can draw liquidity from all around the world. We have corridors all around the world. We have partners all around the world. As far as Ripple, of course, you have Volante building on there. You have a lot of different companies building using the XRPL. But we can pull liquidity from all around the world, whereas a lot of businesses, especially in the United States, especially in the West, they're highly limited. They're severely limited right now because of geopolitical tensions. No one wants to use their systems. No one wants to use Fed now. No one wants to use Swift. Now, they may use it now because they may have to. But as soon as a better option opens up, a lot of those actors will no longer participate in those systems. And so it's sort of they're going along just to go with the flow, just to not make waves in the water. They don't want any trouble right now, but no one wants to use those systems. Hence, you have the BRICS nations rising very quickly. We had an article the other day come out. They're talking about moving forward with developing that BRICS, that BRICS currency. All of these different things are occurring, and it could be very damaging to the dollar, right? So now, anyway. Let's read this little tidbit here. And it's titled Managing Multiple Liquidity Venues. Liquidity is an important contributor to a healthy business that engages in crypto, facilitating core treasury functions, enabling growth, and protecting against risk. But in order to engage with crypto efficiently and effectively, reliable and robust liquidity venues are needed, which obviously XRP provides. As a business that engages with crypto scales, it must maintain proportionately higher levels of liquidity to optimize operations. Yeah, so you're prepared for everything, which is another thing that XRP offers. Remember, like I said, now it's my humble opinion, but if you look at all the different financial institutions we're dealing with now, once everything is up and running, there's regulatory clarity, there's no reason we can't 3x or 4x that. If we can 3x or 4x that, and you see the liquidity that we have now, what will we have then? I believe that we can, theoretically speaking, no guarantee, we can create the biggest liquidity cushion mankind has ever seen. You've never seen a global, keep that in mind. When they say all the money, what you're hearing is globalist system, right? And I know there's a lot of negative connotations to that, but I'm just looking at the money. The money is what you have to focus on. So what we would theoretically see is the first globalist liquidity cushion. Right now you have they're like specialist liquidity cushions, regionalist liquidity cushions, like the Fed, for example, which they can't do what they're doing for much longer. They can't, like, propping up the banks and such like that. They can't do that for much longer. Even they have liquidity problems right now. The more that they print money, the more inflation there's going to be. Then they have to raise interest rates. People are going to lose their jobs. Raising interest rates, then you're crushing a lot of the banks. Then by propping up the bigger banks, they're literally crushing the smaller banks. So now there's a war. There was already tension between the smaller banks and the bigger banks. But now there's a war between the small banks and the bigger banks, which is another reason why a lot of these smaller banks, when there's regulatory clarity, they will gobble things up. In my humble opinion, they will gobble things up like XRP, XLM, Algorand. It's a no-brainer. It's the only way they can compete with the bigger banks who are now taking their customers. Customers are en masse moving their money from smaller banks that could fail, right? And the government will let them fail, right? And moving them to the bigger banks. We've seen that it has only continued and increased. Now, I like when they talk liquidity. Talk that liquidity to me. Let's go. It says to satisfy this demand, avoid disruptions, and optimize pricing, businesses will often tap multiple exchanges or marketplaces to build liquidity. You don't have to do that with XRP. You don't have to do that with Ripple. You don't have to do that with Volante. Heck, you don't have to do that with anybody who is properly utilizing the XRPL. And that's one of the great things about XRP. Just my humble opinion, you could disagree. So yet each liquidity venue is dynamic with constantly changing levels of liquidity volume and varying rules of engagement. Businesses activate more of them, the complexity of managing their assets across all these liquidity venues can become onerous. Then it says here, leveraging crypto for business operations. Let me pause for a moment. Tomorrow, I'm going to be completing a request from the members only section. I will be putting that video out tomorrow. I'm trying to make sure I have everything that I want to place in that video and have all my thoughts gathered. Okay, I get a lot of, they definitely keep me busy in the members only section. Okay, so I do a lot of requests. So that will be another one tomorrow, just so people aren't wondering, well, why did this video come out? Why did this video drop? It's going to be, it should be very informative in my humble opinion. I hope that it serves to help a lot of people. The members only section makes a lot of good requests. Okay. So now I just wanted to put that out there so people know that it's coming. So now let's finish reading this little tidbit here, because I love what I'm reading. It says companies are increasingly leveraging crypto. We've been hearing that more and more and more. We've been covering a bevy of articles from around the world where there's mass adoption happening in the UK. But it's being kept quiet. There's mass adoption. Well, they're trying for mass adoption in different parts of the world. You know, Africa, there's mass adoption happening in Africa. It's happening slowly and they're keeping it quiet. The regular news media doesn't want to report on this. So let's say most of the crypto companies move outside of the West, which is a lot of that is happening right now. Heck, there was even I guess they were rumors, because I think an executive shut the rumor down, the thought down that Coinbase was going to be moving outside of the United States. I believe that they shut that down. But I would think it'd be logical that they would actually give that some thought. However, anyway, as more and more businesses move outside the United States, it lends credence, if you will, to the thought that the switch could be flipped outside the US and soon. And yeah, those prices, my humble opinion, once again, not financial advice. You have to say that, right? Not financial advice. I'm not a financial advisor, but yes, theoretically, those prices would explode. Don't just think about the capital that's moving, but that's great. P2P, B2B, B2C. These are trillions every single time. XRP is trying to move trillions. And I believe that they will. XLM is trying to move trillions. You just had BVP, that company that we've been covering. You had them even tell you they're trying to move trillions. There's no guarantee. But so XLM, they're trying to move trillions. Those prices definitely would go up, but keep in mind the tokenization of everything. You have to keep that in mind. Let's look for the catalyst. How much more mining is going on? Are you keeping up with that? How much more gold is being mined? Silver is being mined, right? In correlation with the rapid development of CBDCs. How many more companies are getting in on producing the products, or not products, but like the pieces and mechanisms that all of these energy companies are using, like silver, for example, in their solar panels and such. Like all of this goes together, so we can know how much volume and value could possibly be floating across these blockchains at some point in the future, based on utility, based on demand, right? And people are logically going to want, companies are logically going to want to be able to access that liquidity a little bit more easily, which that's where DLTs come in. And you're going to need liquidity for that. You don't want to be involved in anything that's going to be rendered illiquid. And now another thing I want to throw out there. I know I'm throwing a lot at you, but we sort of took a little bit of a break yesterday. I thought that video was important from yesterday, but we're getting back to the business now. So I have a lot of thoughts all crammed up together. Now, another thing I want to put out there and keep at the forefront of our minds is, as it's not just the dollar. It's not just the dollar, because as you see, a lot of companies around the world, not companies, my apologies, central banks, governments, they're trying to get rid of their paper currency, right? Now, the dollar is just crashing on its own. It's just, people are dollar dumping. You have the United States debt hanging over their head like the sword of Damocles waiting to fall. You have possible hyperinflation. If things continue this way, hyperinflation is coming. You have that. So all of these things that could bring down the US dollar, but that's the US dollar situation. Around the world, they're literally trying to remove their paper currency. If you see what's going on in certain countries, they're literally forcing the people to let go of their paper currency. Now, of course, given that, there's a lot more digital currency, not e-currency, not like Zelle and all of that archaic legacy system stuff. No, but there's going to be a lot more capital flowing through the new financial system. It's all going to interlink. You won't know one piece from the other. It won't matter once those prices start going up, as the world starts to let that digital currency flow, and they will need to be able to access currencies of all different kinds, because there's a lot of currency swapping. People make a lot of money over buying this currency and that, and you know how it goes. But also tapping into certain corridors to be able to do business. That's going to be made easier. We all know that, but it's something to keep in mind because sometimes we forget that. So across the world, you're going to have a massive continuity of capital flow, theoretically, right? South America to Africa, Africa to South America. I'm talking about in corridors that didn't exist before, right? And that's just an example. So there's going to be consistent value and volume. There's business relationships being forged now, especially you look at the BRICS nations and how they're forming. There's new business relationships. There's new possibilities, right? And we're not the only ones who know that. A lot of powers in the West know that also. They've been heavily invested in these things for a long time, but once again, they just keep it quiet. Liquidity, liquidity, liquidity. That's what's going to make that price explode when it comes to XRP. All right. Then you have the interlinking things like XRP and XLM go hand in hand, right? So let's put them to the side. Quant, these different connectors, smart contracts, Algorand, XDC, Hedera, they're all going to have their piece. That the next true bull run, the next utility run is going to be massive. Now, I have an XLM article coming up that definitely lends credence to that. You can see where everything is going, but let's continue on here. We have a lot to cover, okay? You doing good out there? I hope you're all doing good out there. Now, I wanted to read this little tidbit here. Of course, everything that has to do with the banks affects us because as the banks fall or congeal with us, either way, that increases where our price can go, right? They are going to be congealing with the new financial system. The worse that they do, of course, the more that they're going to need the new financial system. But I want to read this little tidbit here. So this is from elements.visualcapitalist.com, and it's titled, Ranked the U.S. Banks with the Most Uninsured Deposits. Now, I understand how it looked when the government compelled other banks to absorb those failing banks. Keep that in mind. It wasn't an outright bailout. People just say bailout. We have to put clarity on that. Those other banks were compelled because they're part of certain programs to buy and absorb those failing banks. That's number one. Number two, ask yourself this question. Why? Well, they sort of did enact buy-in, what they call it, bail-ins in a way, but not to the fullest extent. Why? Because they had to keep, not in full, because they had to keep the reputations of the banks sort of clean. Now, we covered an article recently from a reputable organization, and they were saying that trust, remember that article? Trust in the banks is at an all-time low. So they can't outright just do bail-ins yet. That's why they had to compel the other banks to buy these banks, right? So that the people could get their money back and the people would be a little bit relieved. They're still a little bit tense because they're saying, hey, you almost did something bad to me. But a lot of people got their money back. They were able to liquidate their USDC, things of that nature, right? Okay. It will ruin their reputation to do the bail-ins, but they still have the bail-in clauses, and the government won't be able to help them for much longer. Now, we're going to get into this. Now, if the government continues to take any measures, right? Well, so I guess any measures you could really call, if you want to be technical, you could call them just bailouts. So I understand why people do that. I like to be a little bit more specific to bring a certain understanding. It's just this is my way and my humble opinion. But if the government is going to continue to take measures to prop up, and that's what it is. These banks are terrible. But we will take your money. As far as the banks, we will take your bank money, no problem. But if they continue to do that, then it makes way for the banks to continue to do absolutely bad business, to implement horrible or terrible monetary policy, correct? That's going to continue. But let's go here. Top U.S. banks by uninsured deposits. This will be a problem. So, of course, you have SVB at the top with it was at 209 billion. That's interesting. Wait a minute. Okay, so it was that's total assets. My apologies. Let's go by percentage of the deposits. SVB had 93.8% uninsured deposits. BNY Mellon has 92% uninsured deposits. State Street Bank has 91.2% uninsured deposits. Signature Bank has 89.3% uninsured deposits. Northern Trust has 81.6%, 81.6% uninsured deposits. Citibank has 73.7% uninsured deposits. CIBC has 73.1% uninsured deposits. HSBC has 70.6% uninsured deposits. HSBC, you're one of our banks, but please don't have problems. We need the banks that are affiliated with XRP, XLM, Algorand to do well, so you can hand that money over to us. All right, so I don't want to handle that problem. I don't want to see your name on this list here. Let's go. Let's keep going. City National Bank, 70.3%. I mean, and it just keeps going and going and going. All right. This is going to be a problem. One of their biggest, you remember how all that started was from a bank run. Well, first of all, that was suspicious. The big money initiated the bank run. Then the regular people came in with their bank runs later, right? Came in and added to the bank run later. But it doesn't take much to cause a bank run these days. All it takes is news of the BRICS nations rolling out that currency that they claim that they're building. We'll see if they do or not. We'll see if they actuate it or not. But all it takes is for them to announce that, and all of them begin to not trade anything in dollars, and you would see that dollar price start going down. Do you have the dollar on your charts? I hope you do. I hope you always have since you've been on this channel. Put that dollar on your trading view and whatever, your Weebles and all that, to watch the fluctuation in value between the dollar and other currencies. All right, stay up to date on that. I have it right at the top. I also have Japanese yen, yuan, all these other different things. I watch everything that I can. But if the people were to see that, and it was unavoidable, and it would be because you would see inflation go insane, then the bank runs would start. They would. And I know you're saying, well, it's not logical, Mick. The money's going down. Why would they run to the bank to liquidate? People just do these things. It's like a control mechanism. Sure, they should probably go into something else. They should probably go into gold, but they usually don't. They should probably go into silver, palladium, platinum, something like that, depending on where they are. Of course, you got to watch the charts on that too, and be careful. And be careful. This is not financial advice. I'm just putting my thoughts out there, okay? But they don't do that. They go straight to the bank. Anytime a problem happens, they go straight to the bank. They pull out some cash. But I understand that having something solid in your hand to utilize. Personally, I'd have a little bit of US dollars, a little bit of yuan, renminbi. I'd have a little bit of yen. I'd have a little bit of pesos. Like, why would you not have all of these different ones? Just you have a stack of them somewhere in a safe, hidden, where nobody else knows, right? Of course, right? And anytime it's a problem, you have some solid stuff that you can use, depending on, and they're all constantly fluctuating in value, of course. But I'm of the opinion that at some point, though, the value of other currencies, if the dollar is going to be greatly diminished, if that actually occurs, we'll stay up to date on the catalyst, that those other currencies, as they're being used a little bit more, the value will have to increase at some point. At some point, right? I mean, but we'll stay up to date on that. But you see where this is going? Look at all these banks here with uninsured deposits, bail-ins. And at any point, the point I was making is, at any time, a catalyst could occur that causes bank runs. It could be, like I said, rapid devaluation of the US dollar. There will be bank runs. People will just panic. They want to get their money out of the bank because when the dollar starts going down, obviously there will be a liquidity issue at some point as people are dumping dollars and such like that. Countries are dumping dollars and companies pull their money out. And the companies, and that's the thing, the companies will pull their money out first. They're going to try to go into things that will hold value and increase in value. So then that's going to cause liquidity shortage from a Fed that already says that most of what they have has been rendered illiquid, right? And a lot of these banks don't have liquidity at all. We know that. So it says here, U.S. top banks by uninsured deposits. Today, there is at least $7 trillion in uninsured bank deposits in America. Okay, so we're going to leave that one right there. You know what's crazy? We're 19 minutes into this video, and we only got through 2 articles. I have like 15 more articles here. I'm just going with it. I'm going to go with it. So I just want to throw some salt on the FedNow system, right? There's going to be limited that who's going to be using the FedNow system as the BRICS nations rise, as the rest of the world says, hey, we don't want to use dollars anymore. Hey, we don't want to use United States or Western systems anymore because you weaponize it against us. Who's going to be using that? Who's going to be? You do know most of the money is made from the rest of the world. They make all the products. They have all the minerals. They also are very huge in agriculture, shipping out wheat and stuff like that. But we know that. We cover futures. We make a little money with futures, right? Who's going to be using it? The West has less power than people think. I'm telling you now. You can believe what you want, but they have to interact with the rest of the world. Nobody's going to be using FedNow system. FedNow system is going to have to be linked to something else. XRPL, Stellar, Algorand, maybe something else that's not the Hedera, XDC, because you're going to have something in the middle to keep it fair for the rest of the world. They're demanding it now. No one can deny that. These are facts. So let me throw some salt on the FedNow system. So it says here, once launched, and this is from moderntreasury.com, so it's reputable. All right. It says once launched, the initial transaction limit for FedNow will be $25,000. What? That's your initial limit? Of course, they're going to change it later. Maybe. Maybe. We'll see. We'll see. You're trying to compete with us with that? That's it. That's where you start. That's where you begin. And then, of course, there's the possibility of sending through a bunch of $25,000 payments. But why would you do that? That's not logical. Didn't XRPL move $2 billion in 1 second recently? $2 billion in 1 second? You see the difference? They have a lot of catching up to do, a whole lot of catching up to do. And once again, like I said, we're not affected by certain liquidity strains that the West will be affected by. We don't have to necessarily be affected by the dollar dumping when that happens. All we have to do is flip the switch and we access a global network, And if the XRPL wants to, they can stabilize that at a high price if they want to. It just depends on the mechanisms that they want to access. Stellar's the same. Algorand, Stellar, it's all the same. It's all the same. It's just a matter of what they want to do. The people that are developing and building on chain. That's it. Right? And it's especially true with any of those that you have to vote. You can vote on chain. Right? So now, I just wanted to throw some salt on that $25,000 initial transaction limit. That is pathetic. But let's go here, okay? Let's continue on. So this article is from coinedition.com. It's titled, John Deaton responds to Kevin O'Leary's comments on suing regulators. I don't understand why there would be a retort to that. You have to stand up for yourself sooner or later. It says crypto lawyer John Deaton has responded to comments made by Kevin O'Leary regarding people who choose to sue crypto regulators. In a recent interview, Shark Tank star stated that choosing to litigate your crypto regulator is, quote, really stupid. Why would you say that, sir? I saw a clip of you, sir, and you were on some talk show where you were talking about the gross overreach and regulation that pushed your businesses out of New York. And you went to what, Fargo or Minot, North Dakota? Yeah, I remember. See, I want to be specific so you know I actually saw this information. And you moved your businesses, you claimed, I believe it was Fargo. I don't think it was Minot, North Dakota. I think it was Fargo. Anyway. And you had to move all the way there just to continue businesses where you said because of all of these different regulations and how the regulators were out of control, that New York, New Jersey, and some of these other eastern seaboard states, and I think also you might have included California, but don't quote me on that. You said that they were uninvestable. There was no reason to invest in them, right? They were done for. So then why would you be against people standing up to the regulators and trying to enact change? That's suspicious, sir. No disrespect. That's suspicious. Now, let's go here. It says crypto lawyer John Deaton has responded to the comments made by Kevin O'Leary regarding people who choose to sue crypto regulators. In a recent interview, the Shark Tank star stated that choosing to litigate your crypto regulator is, quote, really stupid. John Deaton, in retort, said this: a regulator who won't be there in a couple years. That's interesting. A regulator who changes with the next election. Oh, I see what he's talking about. Okay, I see. Yes, that makes a lot of sense. You don't bow down to an unelected bureaucrat when he is being unreasonable and ignoring the law. Yes, good job. See, I like Mr. Deaton because he's a warrior. I like that mentality. Fight back against the bullies, and with reason, right? It says you fight back. There you go. All right. He said the same thing I'm saying. I didn't read this beforehand. I just saw the title here. I didn't know they were going to include a tweet. All right. Says you fight back at Kevin O'Leary TV is used to. Ooh, I'm not going to say that. Whoa. All right. We're going to leave it at that. These individuals are very sensitive. Some of these big money individuals. We'll leave it at that. But we all know what they allege that Kevin O'Leary was involved in. Simple as that. I'll leave that there. So now let's move on here because I want to get this news out to everybody. We have got a lot of powerful news here today, in my humble opinion. So this article is from CoinDesk.com. The world is changing rapidly. This article is titled Real World Tokenization is Surging as TradFi grows more receptive to blockchain. I see these types of articles all the time lately. Mass adoption is occurring quietly, and the news is being suppressed. They're not letting the people know that this is happening. Why? So the big money can be the only people that make money when this pops off. It's the dot-com bubble all over again, folks. I mean, I've never seen anything like it. Let's read this little tidbit here. A number of banks, look how they started off. They just hit you right in the mouth. Boom. They hit you right with a jab. Banks, you're talking my language. I want that bank money. A number of banks and other big brands want to bring more efficiency to their transactions, mostly small and medium banks. I'm telling you, they know their heads are on the chopping blocks. They know the big banks are trying to step on their toes. The central banks gave the head nod to do it. So now the regular big banks, you saw what happened with SVB. We'll leave it at that. They're coming in to eat their lunch, so to speak. They don't like that. They're going to fight back by mass adopting the distributed ledger technologies, XRPL, Stellar, Algorand, when there's regulatory clarity. So they're drooling over the opportunity as well now because their survival is on the line. But let's read this little tidbit here. Just my humble opinion. Blockchain-based tokenization of real-world assets. High-value art. Keep that in mind. High-value art. Oh, my word. Trillions there. All right. Antiques, things like that. Throw that in there also. Trillions. Gold, of course, trillions. Silver, palladium, different bonds and such like. I mean, everything. Real estate. It's coming. I'm not impatient. I'm very patient. I want that money and I'm going to have a piece of it. Let's continue on here. Blockchain-based tokenization of real-world assets, RWA, is gaining traction among major financial service firms and other big brands. That makes a number of industry watchers upbeat, so they're bullish about the trend in 2023. They say tokenization of real world assets, a way of putting ownership of tangible assets such as stocks and bonds, I just said that, right, on the blockchain, offers the convenience of buying and selling these assets around the clock because the transactions do not involve traditional brokers. And that's another thing. People don't want those traditional legacy system intermediaries anymore. They don't want to deal with them. They want something new. That is something to keep in mind. It works better. It puts more power in their hands. So this concept isn't new, but over the past few months, a number of large banks and other companies have begun using the processes. Yeah, testing them out. They're getting everything. They even mentioned Polygon. Let's see what they're saying about Polygon, because I've been sitting on a bag of Matic. It went parabolic before. People took great profits. It did well a few months back, and I believe it's going to do fantastic in the future. It's one of our original utility coins on the channel, along with Batcoin and GRT, the graph. Long ago, you go watch those videos. They're still up. You'll see, right? So anyway, so I like to keep up to date on this. It says here, in November, for instance, U.S. banking giant JP Morgan executed the first live trade using tokenized versions of the yen and the Singapore dollar on the Polygon blockchain. That's Matic, all right? Which I think that was around the time you saw its price start to really go up. If I'm remembering correctly, correct me if I'm wrong. It says the funds allow the transfer agent to keep a secondary record of shares on either the Stellar, XLM is in there again. Yes, XLM, Stellar or Ethereum blockchains. There you go. Stellar's in the game again. Tick tock, tick tock. Time is ticking. Boom. All right. So now let's go on. Let's move on here. And now we're never proclaimed to remember everything. I try to just remember important things. A lot of times I have to refamiliarize myself with companies that may have done business with Stellar. There's so many. It's a lot to keep up with. So this article here is from finance.yahoo.com. And it's titled, Morgan Stanley Analyst Forecasting Something worse than in the Great Financial Crisis for commercial real estate. Man, real estate has been having a hard time. Let's read this little tidbit here. It says, after the banking crisis, could the next domino be all those empty office buildings in your downtown? Investors and economists are sounding the alarm about the commercial real estate market, seeing trouble ahead with refinancing. This sector has been hit hard for years now, with the shift to remote work bringing about the rising vacancy rates and falling property values. For her part, Lisa Shillette, the chief investment officer of Morgan Stanley Wealth Management and strategist, sees a, quote, huge hurdle ahead. Quote, we fear stresses in other asset classes will become another headwind for mega cap tech stocks alongside those posed by profits recession and/or economic recession. Shillette wrote in the weekly Global Investment Committee note, and she has some frightening figures. Oh, here we go. More than 50% of the $2.9 trillion in commercial mortgages will need to be renegotiated in the next 24 months, when new lending rates are likely to be up 350 to 450 basis points. Shillette writes. Alarmingly, Shillette notes that regional banks accounted for 70% to 80% of all new loan originations in the past cycle, with all eyes on the sector after the historic implosions of Silicon Valley Bank and Signature Bank last month. She said office properties were already facing, quote, secular headwinds, unquote, from remote work. And she now sees a wipeout, with vacancy rates close to a 20-year high. Holy smokes. Quote, MS and Company analysts forecast a peak trough CRE price decline as much as 40%, worse than in the Great Financial Crisis. I'm one who takes precautionary measures. Hey, there's a lot of my people are into real estate. I hope that they're protecting themselves at all times, that they have plans just in case things do become worse. Protect yourselves at all times, and I hope the best to everyone. I'm going to leave that at that. That's on finance. Once again, finance.yahoo.com. It was on their front page. All right. So there you go. Let's move on here to a little bit of stellar news. Yeah, a little bit of stellar news. Huh? Says this is from beandcrypto.com, firstly, and it's titled XLM price bullish. I'm always bullish on XLM. Signal led to 900% increase. They're talking about the last time. That's what I like to hear. Things are coiling up. At least this is what it looks like with the catalyst. The catalyst and the charts are starting to come together. That's when you know things are getting powerful. Who knows when it'll happen? I don't proclaim that. I just know they're coming together. The Stellar XLM price has cleared a long and short-term resistance level, a forewarning of a potential pump. Yes. Oh, pump Stellar. I'm trying to keep calm here. Oh man, the Stellar price has increased since the beginning of the year. And recently we had a little up and down, and broke out from a descending resistance line in January. After validating the line as support, the XLM price reclaimed the 10-cent long-term resistance area. This is the next step in a bullish trend reversal. If the upward movement continues, the next resistance would be at 23 cents. Now, this is the important part. I'm going to leave it here so that you can go to beincrypto.com and check this article out if you want to see all the charts. They have nice, beautiful charts here. They're doing a great job. Let's read this little tidbit here. The weekly RSI supports the continuation of the increase since it has finally moved above 50, red icon. The previous time the RSI decisively broke out above 50, green icon, was in November 2020, preceding a 900% price increase. That's what I like to hear. All right. Stellar is my most precious asset. So now let's move on here. Once again, that's on beincrypto.com. They have a lot more here. The next section was titled Stellar Price Surges After Breakout. They have a lot of good information here once again. So check them out. Support these websites that are talking about Stellar. All right. We need them to continue. It would be good. So now in a myriad of ways, of course. So now let's move on here to this article. So this article here is from Cointelegraph.com and it's titled Banking Crisis Could Spark the First Extended Duration Bitcoin Bull Market, says Swan. Swan Bitcoin CEO. Now, of course, they're talking about Bitcoin, but I like to always, it will definitely affect Bitcoin because it's the popular one. It's the big crypto. Normal people know about it. They like the fact they made money with it before. They will be back again. It reminds me of like Celo. People remember they made money with Celo. They're going to be back to make money again. Quant, same thing. When you make that big money from a certain asset and it goes parabolic very easily, like Bitcoin, Celo, and Quant, people are going to be back to make more money. They know it's going to go to the sky again. So anyway, but let me take Bitcoin out of it and insert XRP XLM. We already saw it before, right? Everything started going up as of the recent weeks, and we saw XRP and XLM go up. I'm going to throw Algorand in there. If there's a true bull run, all the bank coins are going to go up, right? My humble opinion. That doesn't mean you need to go buy some bank coins or sell all your bank coins. I'm simply giving my humble opinion. So let's read this little tidbit here. It says the next BTC bull market will last longer than previous ones due to the latest banking crisis. People don't trust the banks anymore. That's also great for the legit cryptos. According to Swan Bitcoin CEO Corey Clipston, says the latest banking. Okay, they reiterate that again. Let's skip that. In an interview with Cointelegraph, Clipston pointed out that far more people today know about Bitcoin as a tool to opt out of traditional financial system than during the previous banking crisis, which engulfed Cyprus in 2013. That means the next Bitcoin bull run could potentially last for 2 to 3 years. Whoa. Ooh. All right, I'll take that because all other crypto goes up with it. According to Clipston, Bitcoin is not threatened by the current regulatory crackdown in the United States, which he sees as a natural backlash after last year's FTX collapse. The Bitcoin maximalist supports the Securities and Exchange Commission's view on altcoins. Wow. All right, we're going to stop there because that part, I'm not going to read that part. Wow, why would you say that? Well, I guess because it benefits Bitcoin, but aren't they coming after Bitcoin too? Like, they're looking at Bitcoin sideways. Listen, I want everybody to win. I'm going to leave it at that. But hearing about a 2-year, 3-year bull run of any kind, that's definitely good news to hear. We'll keep our eye on the proper catalyst for it, right? Obviously, a lot of people are looking at hyperinflation, if the possibility of it soon. You hear all of these wild things about people making bets that Bitcoin goes to insane prices because of hyperinflation. And if hyperinflation did occur, sure, some very high prices are definitely possible. So it's something that I definitely would keep my eye on, just as a crypto investor overall, right? So now let's move on to this article here. I have so many articles. I have like 8 more articles. I'm trying to get to the important ones here. So let me cut some out and we're going to go to Celo. Let's go to some Celo news. So this article is also from Cointelegraph.com and it's titled Celo Foundation and Google Cloud Partner to support sustainable Web3 startups. I told you, Celo's getting more active this year. They're starting to show their power. They're partnering with Google. The collaboration is set to allow founders building on Celo to access credits for Google Cloud and Google's mobile development platform, Firebase. Let's scroll down here. The Celo Foundation has partnered with Google Cloud to support mission-aligned projects in Celo's blockchain ecosystem and advance the early adoption of Google Cloud services. This is going to be major. I mean, we'll stay up to date on the catalysts and the different happenings of this, but at some point in the future, you saw what happened with Celo before without any of this, right? Imagine what happens in the next bull run or utility run. The collaboration is set to allow founders building on Celo to access credits for Google Cloud and Firebase usage, thereby enhancing Celo's mobile-first infrastructure and decentralized applications. Firebase is a mobile and web application development platform developed by Google that provides developers with various tools and services for building apps, including authentication, real-time databases, cloud storage, and messaging. According to the announcement, the Google Cloud team will also provide mentorship and guidance to the Celo Foundation's founders in residence program, and participate in the virtual Celo Camp Accelerator program. Wow, so Google is getting in deep with Celo. My word, I like what I'm hearing. Do it. Hey, Celo, I already liked you before. You're gonna make me like you too much. Oh man, this is crazy. All right, let's keep going. All right, I'm trying to contain some of my excitement. Additionally, the two organizations aim to co-host targeted workshops and events focused on Web3 sustainability and innovation. You know, let me stop there. This is insane. It's insanely good. I always felt, if you remember, Celo had brought in some heavy hitters from the banking industry. This was back it was about in the middle years of the channel, right? So, you know, a little bit, maybe like a year into the channel. And they made that announcement. We covered it here. And I always felt that would be good in the future because they can make deals. They were respected. And I think this is it. I think that power that they have, that respect that they have is starting to show itself, right? For lack of a better word. Sorry, I wasn't so eloquent there, but I think you get the idea. Cazador, the Celo Foundation's head of ecosystem growth, told Cointelegraph that, quote, this new expanded partnership between Google and the Celo Foundation enhances the ability to collaboratively create broader awareness for blockchain technology and its ability to scale real-world use cases on Celo. And then also keep in mind, you see all these pieces connecting? Celo, Google. Remember, Celo is connected to Deutsche Telekom. Deutsche Telekom is connected to T-Mobile. Then Celo is also connected to the World Economic Forum. They love Celo. Then Celo, one of its main use cases is universal basic income. Oh, Nelly. Celo, you are sneaky in my humble opinion. But I'm in deep. I see what you're doing. I don't need anybody else to believe, but I see what you're doing. We'll see how all this plays out, but it's looking good right now. Okay, let's move on to another article here. We still have like 5 articles left, but I just want to choose the best one to end on. So we're going to end here with a little bit of gold news. Why not? It's my favorite way to end because I just love gold. So this is from NASDAQ.com and it's titled Precious Gold Extends Rally as U.S. data bolsters Fed slowdown bets. Let me see if my computer will scroll here. There's like a bunch of things popping up. Gold prices hit their highest since March 2022 on Wednesday, extending a rally after weaker U.S. economic readings bolstered bets U.S. interest rates will rise more slowly. Spot gold XAU rose 0.11% to $2,021.97. That sounds good to me. Per ounce by 0925 GMT, while U.S. gold futures GCV1 were steady at $2,038.70. Analysts said gold was well placed to sustain gains above the $2,000 level as weaker prospects for interest dilute the opportunity cost of holding non-yielding gold, which is also a hedge against inflation and economic uncertainty. Yeah, it's the safest one, in my humble opinion. The third time's the charm for gold, having probed around the $2,000 level in both August 2000 and March 2022. This time it appears to be able to sustain the momentum as dark clouds gather within the economy, unquote, independent analyst Ross Norman said. He said weaker economic data had shifted the emphasis from, quote, inflation busting to saving the wider economy. Gold rallied 2% on Tuesday after U.S. job openings in February dropped to the lowest in nearly 2 years. Wow. The dollar index, DXY, steadied, but was still near 2-month lows, making bullion cheaper for buyers holding other currencies. Gold priced in the euro, XAU, EUR, and sterling was at its highest in more than a week. In Europe, Eurozone recovery gathered pace last month, but the upturn was uneven across countries. The ECB could raise rates by 25 basis points at its May, June, and July meetings, a Reuters poll found. We'll stop right there. Once again, that's on NASDAQ.com. They're doing a great job over there. And I agree with almost everything that they're saying, and gold could go much higher. In my humble opinion, gold can go much higher. Silver can go much higher. As the economies worsen, people will retreat to gold. And don't get me wrong, a lot of people may also diversify and retreat to Bitcoin and such. They look at that as also a hedge against inflation. Bitcoin, well, I'll leave that at that. I have my opinions on that. I personally think it's safest in gold and silver. And you can liquidate that. You have different types of gold cards that you can use, whether it's tokenized gold or real gold in a vault. You just have to do your research on that and find what's best for you if you're going to partake in that. Not financial advice. I'm not telling you to do such, okay? I'm just putting my opinion out there. That's all. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.